And now, it's time for your Low Country Real Estate Market Update.
I'm your host, Brian Beatty. Gosh, 13 years I've been on this program helping y'all better understand the housing market, the trends within it. We'll go through current events. We'll go through market statistics, all of which is aimed at helping you better understand the trajectory of the market, educating you on the process, and helping you plan accordingly so that if you're thinking of buying, selling, investing in real estate, you have reasonable information that you can make assumptions off of, and then you have resources you can tap into to help really to refine your plan, whether that's buying, selling, or investing in 2025 or in years beyond, or just for your own personal education. Today, we're going to talk about North Charleston and them kind of joining the club on trying to put a cap on short-term rentals. We're going to talk about the effects of that market, what's planned. We're going to talk about really just the market in general for a little while. Some interesting things are happening kind of behind the scenes that are having a pretty profound impact on the market right now, things you need to know. And then if you're thinking of buying or selling this coming spring, or maybe the aim is to be, moved into a new home as soon as summer starts, maybe you don't want to interrupt your kids going to school. Well, there's some things you can start doing now, and I want to talk about some of those things really in an effort to just prepare you for the road ahead. So a lot to discuss today. If you'd like to reach out to me anytime you're listening to the show and you're thinking maybe of reaching out to me as somebody that has sold real estate for 20 years. I've sold 1,500 properties locally, about $1 billion worth of real estate. If we can earn your business, or if you just have a simple question, or if you need a resource, maybe a good contractor or anything along those lines, we're here to help. Of course, would love the opportunity to earn your business. My number is 843-800-0065. That's 843-800-0065. Or you can check out our website, listingsincharleston.com. That's listingsincharleston.com. And just really quickly, I video myself as we're doing these radio shows. And so we put the video on YouTube and Instagram and TikTok, I guess, for not much longer, maybe. And then we also put it into a podcast on iTunes and Spotify and Google Play. So, if you missed the show or only a portion of the show, then you can pick it up elsewhere. So let's kind of dive into this. North Charleston had a meeting earlier in the week to discuss some proposed changes to short-term rental permits in North Charleston. So we've had issues not just here locally in different areas of Charleston, but across the country where municipalities are really cracking down on short-term rental properties, or the ability for somebody to rent their unit for anything less than 30 consecutive days. We've seen it in Folly Beach. We've seen it in Mount Pleasant. Obviously, downtown Charleston has a geographic area called the Short-Term Overlay District, where you're allowed to do short-term rentals. And North Charleston wants to follow suit. So they're looking to regulate the number of short-term rental permits that are going to be issued at any given point in time. But they're also trying to crack down really on all of the unlicensed operational short-term rentals. Right now, there are 556 active permits in North Charleston. But in reality, there's closer to 1,700. There's a little over 1,100 short-term rentals that are not permitted, that are operating illegally right now. And so there's a proposal that's been made that would cap the number of short-term rental permits at 60 permits per district. Now, North Charleston is split up into 10 different districts, right? So we're talking about a total of 600 short-term rental permits. Here's the problem. District 8 and District 10, each of which, based on this proposal, would only have a total of 120 short-term rental permits. That's where Park Circle is. 70% of the short-term rentals in North Charleston are in Park Circle, that Park Circle area. So we've got, close to 400 short-term rentals in Park Circle. They're talking about cracking that down to 120. Now, they are saying that, this would not impact anybody that currently has a permit that's valid, that's, following the rules. But, and by the way, they did meet on this, and it was decided, they did not pass the vote. So nothing's going into effect yet, but they're going to bring it up in future hearings. And the reason this is important, and it kind of ties in to a larger issue kind of at hand right now, which is that, number one, if you look at the Folly Beach market as an example, they had a cap that was imposed of 800 short-term rental properties. Well, that is a vacation, haven, and it's a great place for folks to own investment property if it's operated as a short-term rental. Now, in the grand scheme of things, and let me just do a quick sidebar here. When you look at the numbers for short-term rentals, in most instances, if you're involving a short-term rental management company and it's a turnkey management company, meaning they're really doing everything for you and you as the owner are just collecting a check, those fees can be anywhere from, as low as 10% to as high as 40% of the income generated from those short-term rentals. So when you incorporate that, plus the mortgage payments, plus the taxes, plus the insurance, which has gone sky high in all the different areas of Charleston, in a lot of instances, they're actually not the cash cow that a lot of people think they are, which is why you have to buy them at a certain price in order to achieve, of course, that required return of your investment. But anyways, I digress. I just want you to know that if you're thinking of buying something as a short-term rental, there are still areas, there are still pockets that, of course, allow you to do that. Some have waiting lists. Some areas are not regulated yet or don't have a cap yet. So if that's something you're thinking about doing, again, we own a property management company, so it's easy for us to run the numbers and give you an idea of what realistically you're going to generate in the form of rental income. And then, of course, you need to really understand all the expenses associated with owning one of those types of properties so you can properly identify your net income and then your return on that investment. But anyways, with this issue with North Charleston, capping it at 60 permits per district, a total of 600, when in reality, although 556 are active permits, there's about 1,700 properties that are acting as a short-term rental. The problem is this. And again, I do want to stress that Tuesday of this week, they met. The vote did not pass. I don't believe there were enough council members there to pass the vote. I wasn't there. But anyways, they're going to bring it up again, and they're going to try and hammer this thing home. So in other words, I think it's probably coming. It's just not happening right this moment. But here's the challenge. Anybody that has a permit right now that's operating their property as a short-term rental wants to really celebrate those rental income numbers when they're putting that property up for sale, saying, hey, here's how much you could potentially generate if you want to turn this property into a short-term rental. Well, if a cap system is imposed and a purchaser is looking at that property as an investment property, then they're going to have to join a waiting list, meaning there's going to be a year or two or three, however long, for them to be able to actually use that property as a short-term rental, which means they are left with either operating it as a kind of a medium-range rental, 30-day rentals or more, or just looking at it from an annual rent perspective. But maybe they target folks that need places for 1 to 3 months, traveling nurses, people that are coming in for short periods of time to complete some sort of a job, or maybe somebody that just wants to be in Charleston for a few months of the year. They just don't want to buy a second home. So there's a market for that. But, if we look at what happened to the Folly Beach market when that cap system was imposed, those permits are not transferable. So anybody that buys it's going to have to then go to the back of the line, which means, sellers and agents and investors can see the value in a property that can be used as a short-term rental because of the income that they can generate being more than what you can get from just a tenant that you stick in there for a year. Well, that obviously has an impact on value, how much somebody's willing to pay for that property. And one of the big complaints, of course, is that because there are so many short-term rentals in North Charleston, they've lost a sense of community, right? Well, I think we also have to take into consideration how much that area of our market has grown over the past few years, thanks in large part to short-term rentals and the folks that come in. And it's not like they're going to the grocery store and they're cooking at home, and they're going out. They're supporting that local economy. So it's almost like kind of careful what you wish for, right? But I do think that if that cap system is imposed, obviously that's going to be a challenge, I think, for a lot of the folks that own short-term rentals right now. I think they're going through a variety of things. I think, number one, the market's saturated. I think that, not everybody wants to rent in North Charleston or Park Circle, I think you can do a pretty good job from a marketing perspective to entice people. But, what's the next step? Where would you go if you can't buy a short-term rental in North Charleston? Do you go to Hanahan, where there are no real rules yet? I mean, the challenge there is, what's the demand look like, right? Are there really a lot of people that want to stay in Hanahan for a few days as opposed to pointing up some money for a hotel or something like that? I think the folks that have purchased short-term rentals over the past few years, and I know because I represent them, we've sold them. They're not getting the rental income that they thought. The cost associated with ownership and the fees associated with operating a short-term rental are higher than what they anticipated. And it's time for them to sell and move on, take that equity and put it into a different investment vehicle, whether it's another real estate property through some sort of 1031 tax-deferred exchange, which allows you to delay paying capital gains tax, right? It defers that payment. You can't wipe it out. You can defer it. But we've had a lot of folks that have approached us saying, we're not seeing the income that we need to see. It's really not a great moneymaker for us, but we have a lot of equity in the property. So it makes sense for us at this point to analyze some other opportunities. And we do this for folks all the time where we'll do a portfolio analysis. If you own rental property, we'll look at it and say, well, here's what's performing really well, and this is what I would keep. Here's what's underperforming. Here's what I would do. I would maybe sell this property and do a 1031 tax-deferred exchange into another property that's going to earn you a higher rate of return. Here's the cost associated with that. In 9 months, you're going to be making more money than you are now just by shifting some assets around. And so that's something that we are happy to walk through with you if you're thinking of maybe making some moves in real estate this year with regard to your rental portfolio. If you're looking at buying an investment property, we're going to talk more about that a little bit later on in the show. But if there's anything I can do to help you here, whether it's performing a rental analysis or portfolio analysis, home equity analysis, reach out to us. 843-800-0065 is our number, 843-800-0065. Or check us out online on our website, listingsincharleston.com. That's listingsincharleston.com. So if you're just joining us, we were just talking about the cap that they are proposing in North Charleston. They're talking about limiting it to 60 permits per district. There are 10 districts, i.e. 600 permits. Park Circle has 70% of all the short-term rentals. They've got several hundred more than they're proposing permits for. So I think the bottom line there is that if you own an investment property in Park Circle, specifically as a short-term rental, really if you own an investment property at all, now is a good time to just take some stock. Have somebody analyze that property, and then based on what I know at least of the investment property world, because I'm a real estate investor, right? Aside from just having this show, right? I run a real estate team. I own a property management company, a private money lending company, and I invest in real estate. And so what we've done for a lot of folks already this year is just a rental portfolio analysis. Let's look to see what's performing really well and you should keep, what's underperforming that might make sense for you to divest and put into a different asset class, stock, bond, whatever. Understanding, of course, that I'm not a financial advisor, but those are the things that we're doing for folks right now. What I really want to talk about, though, for the next little bit here is just the market in general, because it's a bit of a mixed bag. Kind of tough to put the finger on the pulse of the market right now because we keep having these highs and lows. I feel like our market is very bipolar at the moment, right? We've got multiple personalities going on here that we have to deal with, and a lot of that revolves around interest rates. In October of 2023, interest rates went up to 7.79%. Well, then they came down, and then they went back up, and then they came down, and then went back up. We're not sitting very pretty right now as it relates to interest rates. The challenge is, Friday, January 10th, we had a better than expected jobs report, and that actually bumped interest rates up, 30-year fixed mortgage rates up to about 7.24% to be exact. And rates have been rising since December. They were in the mid sixes in the beginning of December, and then they kind of shot up to 7.25. And then a few days ago, we had a CPI report that came out that provided some relief, which meant that bond yields came down, and it brought interest rates down 12 basis points to 7.13%. So regardless of what's happening with the rate, we have a lot of folks that have reached out that are just in the planning process right now. They're thinking of, hey, I want to do something this spring. I'd like to be moved either by the end of summer or when summer starts so that we can spend some time this summer getting everything settled for the new school year. A lot of people are just making plans right now, and I think it's great. I love having those conversations with folks because the sooner the better. I think that the folks that are just maybe naturally procrastinators or that just think everything is going to work out and everything is going to be okay, those end up usually being high-stress sales because there just hasn't been enough planning and preparation. The examples that are really tough to deal with are the ones where somebody's been building a new house. They're moving into a new construction home, and that home is nearing completion, and they need to sell their house before they can buy it. Well, if you haven't given yourself enough time and it's a rush to sell the property, there's a pretty good chance that you're going to end up selling that house for less than what it's actually worth because you've painted yourself into a corner. You have to sell your home in order to buy the new construction one, or you start, there's per diem fees that they'll charge. You might lose your earnest money. There's a lot going on there. So just in the grand scheme of things, planning right now is an important part of the process. And we'll get to more of that here in just a little bit about, what you can do. But what I want to focus on for the next few minutes, at least, is just where we are as a market right now. And if you look at kind of where we ended in 2024, pending sales or properties that went under contract, that was up a little over 2%, right? Closings were only up 1%, but new listings, properties available, was up about 17%. So we've got more properties hitting the market and staying on the market, which is increasing the supply of homes for sale, which is weakening demand, which is weakening or slowing down the pace of acceleration for home prices. Even though for some reason, home prices went up 4% last year. There is a lot to be said, I think, for the resilience of our market. Because, again, we're an inbound relocation market. A lot more people move here than move away from here. And I know that creates challenges when it comes to things like infrastructure, and nobody likes sitting in traffic, and everybody remembers the good old days of being able to drive 100 miles an hour on 526 and no one's stopping you because no one's around. I get it. I've been here for, 23 years, originally from Northern Virginia. And, of course, I've seen a massive change in Charleston over those years. But when it comes to the real estate market and the projections, the predictions for what this year is going to look like, I got to tell you that we did a show where we discussed what we think is going to happen this year. As of right now, I'm holding very firm to those predictions that we've made. We weren't really anticipating interest rates being where they are right now, though, at this point in time. Again, we went from 6.5 to 7.25 in like that, in the flash of a pan. I anticipate those coming down again, of course, but are we going to see a market this year with interest rates that with a 5 in front of it? I'm not sure. I'm not feeling very confident and optimistic about that right now. Now, of course, you also have a lot of folks that have looked at the market that have listened to this show, but have their own spin and take on what's going on behind the scenes. And I appreciate that. And I love those discussions. If you have an opinion on the trajectory of the market, you have some information that you think might aid in, in even my decision-making process when it comes to telling you guys what I think is going to happen in the market, I'd love to have that conversation off air, by the way. Give me a call, 843-800-0065, 843-800-0065, and let's chat about that. But here's what I see happening right now. Buyers are not coming up to a seller's asking price. They're looking at what has sold recently. They're, in most instances, offering either at or less than fair market value. The challenge is properties are sitting on the market, and they've been on the market a little while because we had a pretty weak September through December. We had a pretty weak fourth quarter here in Charleston. And so for those properties that are still on the market, buyers, of course, think that there is now blood in the water and you are a desperate, distressed seller and are going to take, 15, 20% off of your asking price in order to sell the property. This is where working with a real estate agent, in my opinion, is critical, because at the end of the day, you need to have an understanding of what that property is worth. It doesn't matter how much somebody's asking for the house and the difference between how much they're asking and what you can buy it for. The only thing that matters is what is it worth and what are you willing to pay for it, and how much of a spread can be created between what it's worth and what you ultimately get it for. On the buy side, of course, on the sell side, it's how do we get you as close to what it's worth, if not more, as possible. And I'm here to tell you that it does not just revolve around negotiating the price. If I were buying a house right now, there are a few things that I would require that seller to do. And we're going to talk about that here in just a moment when we come back, because if you're selling a house, you need to be prepared for the dynamics of the market. You need to understand how buyers are thinking and feeling and behaving. And of course, if you're a buyer, you need to look at where the opportunity in the market is, and you need to understand how to leverage that when negotiating against a seller. Because at the end of the day, even though listings are going up, even though the supply and demand curve is changing just a little bit based on more homes being on the market and buyers maybe not being as motivated to buy right now because of interest rates, there's information and negotiating power that can be used on either side, buyer or seller. But I think the person that's in your corner, the person representing you, your real estate agent, is going to have a lot to do with your success in negotiating. So I want to talk about that. Let's take a quick break. If you want to reach out to me, if you're thinking of buying a home, selling a home, investing in real estate, maybe you have an investment property you'd like for us to manage for you, we'd love the opportunity to earn your business. We've got some great incentives going on right now, whether it's, buy and sell with us and move for free, or 25% off of our highest listing commission based off of our menu right now. We're giving some great incentives out. So if you want to learn more about that, listingsincharleston.com is our website, listingsincharleston.com, or check us out on YouTube, Spotify, iTunes, Google Play, Instagram, TikTok, all that great stuff. Or you can just call or text 843-800-0065. That's 843-800-0065. This portion of the show is sponsored by Brian Wells of Coastal Creek Design. CoastalCreekDesign.com. If you're thinking of building a home or doing a major remodel, you need to speak with them first to help draw up some plans. So CoastalCreekDesign.com. And I just like to take a moment and say thanks to those of you that listen to the show and rely on the information within it. It's always great speaking with folks that have listened to the show for years. And 13 years we've been doing this program. So thank you for those of you that have stuck with me and rely on the show for information on the housing market. Really what I want to talk about now, though, is what to do with some of this information. We've done a pretty good job, I think, over the past few weeks in recapping 2024, in highlighting what we think is going to happen in 2025. So for those of you that have some plans, you're thinking of making a move this year, what can be done right now? If you're thinking of selling maybe this spring with the idea of being moved in the summer, like so many people do. From a seasonality perspective, that's a very common occurrence. So what are some things that you can do right now? Well, in no particular order, I think that you can start to identify things that need to be maintained or that you need to repair. Maybe you consider some upgrades to your home. You need to know how much your home is worth. We do that through something called a home equity analysis. Let's not just look at, comparable sales. Let's look and make adjustments for the condition and the upgrades in your home. Let's get you a really, really pinpoint accurate number that you can work off of so that we can say, if this is what we think it's ultimately going to sell for, when you deduct all of the expenses associated with selling, and then you deduct the principal balance of your mortgage if you have one, here's how much money you have in your house. Here's your cash. Here's your equity. We do the same thing when it comes to buying a house. We do a borrowing power analysis, right? And maybe that means shifting some finances around and maneuvering a few things, maybe paying off something or deferring something. Or maybe there's something on your credit report that you didn't even know you had, or maybe it's a mistake. All of these things can make a big difference in the form of how much you're going to be paying for the next house that you buy. And of course, you need to understand where you're going and what opportunities there look like. And then maybe if you are thinking of selling and buying another house, that there are some different pathways to selling your house. Of course, you can sell it on your own, right? That's always been an option. But I want to talk about the difference between a brokerage exclusive and hiring an agent to just put your home online, right? So let's kind of dive a little bit deeper into some of these different categories. The first thing I'll mention is that not every home that we put on the market, when we meet with somebody and we talk about the home selling process and we advise them on what to do and what not to do, it doesn't always make sense, and hear me out here, it doesn't always make sense for the seller to make a repair or certainly make an improvement. But that's the first difference we have to come up with is this a repair? Is this deferred maintenance? Or are we upgrading something with the hope that it will sell for more than we spent, right? That we're creating value. Now, there's a report that comes out every year. We don't have it for this year, for 2025 yet, but we certainly have last year's that we can draw some conclusions off of, and it's a cost versus value report. And what's really cool about this is that they'll track, I think it's like 23 major project types, whether it's a kitchen remodel or a bathroom model or putting on a roof or putting in windows or changing your front door. All these different home projects, they've tracked how much it costs, the associated resale value so that you can see how much of the cost you've recouped. Have you made money on that? Or if not, how much more have you made in comparison to just giving the buyer the money to do it themselves? And that's the first thing that I really want to talk about here is that, yes, you can pass the buck to the buyer and say, hey, I'm not going to put on a new roof. I want the buyer to be responsible for a new roof. Well, little did you know, probably, insurance really is a pain in the butt right now, home insurance. If your home is, if your roof is more than 9 years old, there's a high likelihood that the insurance company for the buyer is going to ask the seller to replace it, or they're not going to write a home insurance policy. I mean, insurance has become a real issue when buying and selling real estate. So that's something to understand, but let's not pick on a roof because there's too much going on there. Let's say that let me pick something here from this list because I've got this list. And by the way, if you want a copy of this report, what's really cool is you can look at it from a national perspective. You can look at it from the South Atlantic region perspective, or they've even tracked jobs in Charleston, South Carolina, and they'll tell you based on the local area how much that job should cost, how much resale value was associated with that once the property sold, and how much of that cost was recouped. Or did you make money in the process? So let's choose a window replacement, right? Vinyl windows. They say it's going to cost you about $20,000 and you're going to get $12,500 back, which is a 63% recoup of your money. So it begs the question, right? With whatever it is in your house that you're thinking of repairing or remodeling, does it make sense to do it? Or should we just pass that off to the buyer and offer them some sort of concession or incentive or bake that into our asking price? I will tell you that generally speaking, if we know we have to do something like replace a roof and it's going to cost $15,000 to replace the roof, so we reduce the asking price by $15,000 to account for that, guess what? That buyer is still going to want to negotiate based on the condition of the roof. So you're not necessarily doing yourself any favors there. The question again is, does it make more sense to do the work, or does it make sense to just have the buyer take care of it? And we'll try and solve that gap in negotiations, right? Maybe the roof is just one thing that's a deterrent when in reality they really want the house. And so rather than you paying for a new roof and hoping that you get, the majority of your money back, maybe you split that cost with the buyer. I mean, there's a bunch of different scenarios here, but the point is you need to have these discussions, and it's really helpful to have the data to support the decision-making process. You also have to look at, and this is what a real estate agent's great for, right? You can look at comps and you can say, all right, well, what sold that had a new roof versus what didn't? if everything else is equal, and if there's not, you make adjustments for that, right? But the analysis is an incredibly important part of the process. And I think something that if you're thinking of selling in the spring, probably something you need to start doing like now. You need to have a real estate agent come by and say, this is what I would do. This is what I would not do. If you choose not to do anything, this is what it would sell for. If you choose to do these things, here's how much it's going to cost, and here's how much we can then sell the property for. Does it make sense to do that? Do you have the funds available to do that? If not, you can borrow them, or we just incorporate that into the overall plan. But that's, in my mind, that's the first step. If you're thinking of selling a house and maybe buying another is, all right, well, let's determine what the property is worth in its current state. And then are there some things that need to be done to increase the likelihood that we get that offer? Or are there opportunities for us to sell it for even more? And what does the surrounding area tell us is an appropriate amount of renovations to do? Like if you're selling a house that's worth $300,000, the last thing you want to do is put a $50,000 kitchen in there. You're not going to get your money back. But if you're in $1 million price range and you put $20,000 into your kitchen, maybe that results in you being able to sell it for $40,000 more. You have to look at the market, the comps, and what's expected of a property in that price range based on buyers and their feedback. I think that, again, that home equity analysis is an incredibly important part of the process right now. But if the intent is to sell a home and buy another, not only should you, of course, be looking at what you can do and what you should not do to your house, but you also need to understand, how much home can you afford when that property sells? I can't stress enough, if you're going to get a mortgage, speaking with a lender sooner rather than later. So many buyers prefer to just have the conversation with the lender and get their pre-approval letter once they've found the house they want to buy. Please, please, please don't do that. And the reason I say that is because we have had it happen too many times to good people, to good clients with great intentions that want to make fair offers that are just, they're totally blindsided by the fact that something was on their credit report that was either wrong, they forgot about, shouldn't be there, or because they didn't have a conversation with the lender, they are now penalized at a higher interest rate to buy the house they really want, as opposed to having that conversation earlier on in the process and maybe doing a little financial maneuvering. Maybe you pay this off or pay this down or defer this, or, that's the great thing about having a really solid lender partner is that they can analyze your debts, your income, your assets, and say, if you really want to maximize your purchase power, these are the things that I would do. And here's about how long it's going to take for it to have an impact on your credit score or an impact on my ability to calculate your debt to income ratio favorably for this type of property or a property of this magnitude. So if you need a recommendation there's no cost to this. It doesn't even hurt your credit score unless you're going to do this multiple times. So don't even worry about that. But give us a call. We're happy to walk you through this process. But I think the planning phase is right now. So at least get yourself acclimated with current market conditions in your area, in your price range. Understand how much your property is worth right now in its current state, and what can or should not be done to the house to get it market ready, and how that then impacts your ability to purchase the home that you're going to move into, right? You want to kind of begin with the end in mind, and that might require some financial maneuvering. When we come back, though, I want to talk about, if I'm a buyer right now, what are the things that I would need to see from a seller in order to feel really comfortable moving forward? And if I'm a seller right now, how do I react to that? How do I position myself to sell for top dollar in a market that's, it's a bit of a mixed bag, like we've said. So more to come here on the Brian Beatty Real Estate Show. Again, if you want to reach out to me, you've got questions, you're thinking of buying, selling, investing, you have a property you'd like for us to manage, you want to learn more about our incentives, listingsincharleston.com is the website. That's listingsincharleston.com. Or check us out through YouTube, TikTok, Instagram, all that great stuff. Or just call or text me, 843-800-0065. 843-800-0065. We've covered a lot of ground today talking about the market in general. We've talked about that short-term rental cap proposed in North Charleston, which did not pass, but is, I think, in my mind, at this point, kind of inevitable. And we talked, kind of leading into this, what you can do right now if you're planning on selling and or buying a home this coming spring. Maybe the idea is to move in by summer. I want to talk for just a moment about, if I were to buy a house right now, if I were a buyer in this market, understanding that interest rates are high, understanding that, properties have sat on the market, at least at this specific point in time, for the longer than they have in years. The days on market for existing listings has inched up, right? It's increased. Part of that's based on the seasonality of the market. Part of it is obviously interest rate driven, right? It's just not affordable for a lot of folks. And so we see a smaller buyer pool anytime interest rates go up. And we went from 6.5% to 7.25% in about a month, from December to the beginning of January. They've come down just a little bit, but they're still in the sevens. If I'm a buyer right now, there are a few things that I want that seller to do, and just some overall tactics that I would probably use. And real estate agents probably aren't going to like this, by the way. So I understand the irony in this commentary that I'm about to give. But first thing is that I would want that seller to provide me with a lower interest rate than what I could just qualify for on my own. Now, of course, you still have, when you're negotiating an interest rate with a seller, unless they own that property outright and you're going to do seller financing, which is an option. If they, let's say that interest rates, like they are now, are above 7%, you would still, as a buyer, have to qualify to own that property at a 7+% interest rate, right? Whatever today's interest rate is. But you can get the seller to either temporarily or permanently pay down your interest rate. It's called you can do it for a year, you can do it for 2 or 3 years, or you can do it for the life of the loan. So if I were a buyer right now, I'd want that seller to provide me with probably a 2-1 rate buy down, meaning for the first year, that interest rate is going to be 2 percentage points less than 7%. So let's call it 5%. And then the next year, it's going to be 6%. And then in the third year, it's going to go to 7%. And the idea is that, of course, between now and 3 years from now, interest rates will have come down to lower than where they are today. So you'll save money in the form of monthly payments. The other thing I would want, if I couldn't get that, would be closing costs to be covered by the seller. I want that cash to, at least in my mind, be able to invest at a higher rate of return than the cost of the interest on the mortgage, right? So that's the opportunity cost associated with either paying your own closing costs or putting down something like 20%. If you can afford the payments at, say, a 10% down, then I would save that 10% of cash either for a rainy day fund or for additional investing. Now, we've had a lot of buyers recently that have been pretty aggressive with their initial offer. We're finding them, they're coming way up from their initial offer. But I think a lot of buyers are kind of the mindset right now that, hey, look, let's shoot something across their bow and let's see what they do with it. Let's see how negotiable the seller is. Well, I think a lot of the smart sellers out there are saying, look, I'll give you an example. Let's say something's listed for $1 million and a buyer offers $800,000, right? Not many sellers out there are going to even entertain that. In fact, a lot of them are just going to reject it outright. I always encourage sellers to counter so that we can maintain high ground. So maybe in that instance, I'd say, look, I'm going to come down to $990, but your next offer has to be incredibly attractive to me. Otherwise, we're done here, right? And so we've had folks in those instances just take the $990, the buyers. We've had folks, obviously, that said, hey, sorry, we're too far apart. We're not even going to counter the counter. And that's fine, too. Those are people that are just on fishing expeditions looking for ridiculously good deals. And it's still, even though interest rates have gone up and inventory is continuing to rise and the pace of appreciation has slowed way down, it's still basically a seller's market. It's not like our market is flooded with opportunity for buyers right now. So it's an interesting world that we live in. But if I were a buyer and I'm not pressed to move into that house, I don't have a definitive deadline by which I have to be into a new home, I might make somebody a fairly aggressive offer. They counter, I don't like their counter, and then I sit on it. I sit on that counter for a few days, see if they maybe come back to me. Because for a lot of these sellers that have been on the market for a few months at this point, they haven't seen an offer. So you finally give them one, they counter, you do nothing with their counter and say, sorry, we're probably not going to be able to make this work. And so you don't counter their counter. Well, now they're like, oh, well, see if they'll do this. Or maybe you go back to them and say, hey, have you given any more thought to my initial offer? I mean, is there any more negotiability here? And you'll find the sellers that are really motivated are going to be the ones that kind of jump first and say, let's see if we can make a deal work. How about we go down to X? Would you be comfortable with that? Now you've kind of reined them in, and you as a buyer are on firmer ground. If you're a seller, here's what I'll tell you, and just to keep it short and sweet, buyers aren't coming up to your price unless you get really lucky or the buyer absolutely loves everything about your house and is willing to pay top dollar for it. If you're overpriced and the mentality is, hey, just let a buyer make an offer and we'll negotiate so that we give them that feel good, that euphoric feeling that they've quote unquote beat us up on our price. I mean, I understand the mindset, but you are losing interested buyers and their offers to sellers that are more appropriately priced. If you maintain that position of being overpriced and just leaving a bunch of room for a buyer to negotiate with you, in a sense, you're allowing your competition to sell sooner than you are, and you don't know what their situation is causing them to sell. They might be in some form of distress. They might have corporate relocation benefits. There might be something involved with that sale that allows them to be more aggressive or forces them to be more aggressive. And if you're not in that same boat, but they sell first, now your value of your home is directly compared to that home as a comparable sale. So there's a lot of moving parts here. What I'll say is that if you're thinking of buying or selling or investing in real estate, let's come up with that plan first, like we talked about last segment. Feel free to reach out to me. 843-800-0065 is my number, 843-800-0065. Check us out online, listingsincharleston.com. That's listingsincharleston.com. And don't forget to check us out on YouTube and TikTok and Instagram and Spotify and Facebook and all that great stuff. But thanks for listening. You guys enjoy your weekend, and fingers crossed for some snow next week, right? Thanks for listening to the Brian Beatty Real Estate Show. Y'all have a safe weekend.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-800-0065. That's 843-800-0065.